Oftentimes, the simplest indicators can give you very useful strategies for scalp trading. In this video, I am going to show you one such indicators. The MACD indicator is widely popular and used by experienced and inexperienced trader alike. The reason MACD indicator is so popular is because it is a trend following momentum indicators. And as the saying goes, in trading, trend is your friend. However, MACD is a very useful tool when the market has a lot of price action. When the market is trading sideways, the MACD indicator alone can produce a lot of false signals. In this video, I will show you how you can use MACD indicator, along with some other technical indicators, to maximize the profits. I will show you the strategy written in Pine script, and also the performance of the strategy with Strategy Tester on TradingView. You can also find this indicator's script in a link in the description. And in return, I ask you to simply smash that like button and subscribe for more videos. MACD, or Moving Average Convergence Divergence, is a trend-following indicator. The MACD indicator shows the relationship between two exponential moving average of a security's price. Although a trader can set any two exponential moving average periods, the commonly used moving average periods for the MACD indicator are 12-period EMA and 26-period EMA. The MACD line is calculated by subtracting the long-term, or the 26-period EMA, from the short-term, or the 12-period EMA. The exponential moving average places greater weight and significance on the most recent data points. Once you have the MACD line, then a 9-period EMA line is plotted on top of the MACD line. This line is called the signal line. A trader can identify the market trend by looking at the crossings of the signal line and the MACD line. A potential buy signal is when the MACD line crosses above the signal line, and a sell signal is when the MACD line crosses below the signal line. Now, let's script this simple MACD strategy and see how it performs. We will check the performance on SQQQ on 1-hour chart. The strategy starts with an initial capital of $50,000, and the default quantity of trade is 100, which represents the order size. The MACD indicator takes 3 inputs. As I said before, the user can change the input if they want, but the default values for the MACD indicator are 12 and 26-period EMA to calculate the MACD line, and 9-period EMA for the signal line. When applied the strategy on SQQQ, we can see a buy signal every time the MACD line crosses over the signal line. However, if you look closely, not every trade ended in profit. The trade that ended with a stop loss indicates the trade went against our favor. By looking at the trades that failed and the ones succeeded, an obvious pattern can be observed. Can you identify the pattern? Pause the video now and comment why you think the trades ended up the way they did. I hope you all got the right answer. The reason the strategy went against the trader is because the entry was not following the price trend. As you can see, when the overall price was trending down, a buy signal ended up in a loss. But, when the strategy made a buy signal with the price uptrend, they all ended up in profit. So it is important to trade with the price trend. One of the ways a price trend can be tracked is with a longer period exponential moving average indicator. An exponential moving average is different from the simple moving average. A simple moving average simply sums up the closing prices of a specific period and divides it by the number of periods. However, the exponential moving average calculates the multipliers for smoothing the EMA. The multiplier, or the smoothing factor in the EMA, is calculated by the following formula. And this is the formula to calculate the current EMA. Unlike the SMA, which gives all prices of the specified period an equal weight, EMA gives the recent prices a higher weight. For this strategy, we are using a 50-period EMA. However, the value can be updated based on the trader's need. With the help of EMA, it becomes more clear which way the price is trending. Anytime the price is closing above the EMA line along with the EMA line moving upwards, it indicates an overall price uptrend. While price closing below the EMA line with the EMA line moving downwards, indicates a market downturn. It is also important to note that the EMA line may not be the best trend indicator when the price is moving sideways. After we add the EMA indicator along with our MACD indicator, let's look at the changes in our strategy performance. Adding the EMA line to track the market trend, along with the MACD indicator, anytime the price closes below the EMA line, the strategy ignores any bullish crossover and avoids calling any buy signals. Only when the price was above the EMA line, a buy signal was triggered. As I have mentioned before, both the EMA line and the MACD indicators give false signals when the price is moving sideways. Without making the strategy too complex, we can add an additional check to avoid some of the buy signals that are too close to the EMA line. We want the buy signal to be triggered when there is a clear trend in the EMA line. But when the price is too close to the EMA line, we cannot be sure about the price trend. So until the price and the EMA line has a certain difference between them, the buy signal will not be triggered. Now putting all these together, the complete script can automatically trigger the buy signal, along with the appropriate take profit and the stop loss level. In this case, we are using a 1% profit target and stop loss at a 1-to-1 ratio. Let's quickly code this up. When applied this strategy on SQQQ on a 1-hour chart, the strategy produced over 90% win rate, and a net gain of more than 30% since 2020. Obviously, this strategy is not perfect, and there is a lot of room for improvement. You should not use this strategy in your trading without understanding properly how this strategy works on your instrument. Regardless, this simple strategy, when applied properly, can bring big profits in your trading. If you learned something from this video, please leave a like and subscribe to the channel. You can find the indicator script with the link in the description. Next time, I will come back with another strategy and its performance. Thank you for watching.